Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
My name is Steve Vetterl. I am the knucklehead on the mic today. So today's the Saturday before the 4th of July. So happy 4th of July to all of our US subscribers or any of our US based subscribers overseas. Do keep in mind that the great thing about me constantly droning on and on about joining the right Telegram channel very simply is that you get to share in success stories. So if you guys are looking in the Arrow chat group, maybe you want to take a look at it when we're done. There is a trader inside of it, will go unnamed, that had over a $14,000 week. So all from using the strategy. Maybe that'll entice you guys to get in the room and actively participate in all of the chats, in addition to listening to the recordings for the developers each week, in addition to myself. So if you want anything, me to go over anything, just post it into the Q&A window, please. Chat window if you care to chat with the group. We've got a bunch of new subscribers, so welcome everyone. I try to do these calls as close to 10 a.m. as I can on Saturdays and Tuesdays Pacific time every week. They are recorded. They are put up on our Vimeo channel as well as YouTube. You can access all of that stuff from the back office AP Live, which is continuing to expand out, hopefully soon into our own platform, which will encompass everything from Telegram to trading rooms and all that great stuff. So it's good to see. And for what it's worth, the test, beta test, of which I've been for the first time in over a year, sort of actively participating in a very small group, but yet a lot of pro traders in there, had a really good week with our beta test for I think it's a MAV, both MAV version and an automated EA. So just a heads up that we got lots of products in the pipe. We're going to be coming out with lots of stuff. I traditionally in the past tried to stay away from a lot of this till they got a lot of this stuff ironed out, right? But I think it's always good, because I'll tell you, back in the early days, I had a lot of futures traders approach me between probably like 2010 to maybe like 2013, like, hey, can you like set up a trade room and guide us through? And it was a fair amount of work, but I've been through the ringers a bunch in terms of captain in a ship of traders. So I always try to set these calls up in a manner that's easy to understand and be able to facilitate. So let's take a look at next week. So here's July 4th, tomorrow, Sunday through July 10th. I always make sure this date's correct. I even screw this up sometimes myself. But essentially, it's a bank holiday on Monday. So if you're not familiar with 4th of July, sometimes it falls on a Saturday or Sunday. So depending upon the year, the US will recognize that holiday, taking one of those 2 Fridays or Mondays off. In this particular case, it's a Monday. So Monday, June 5th holiday, slower everything. I would expect, honestly, with the exception of the Fed meeting that you have, and maybe to a lesser degree, some early AM chat by Governor Bailey here, and you can see unemployment rates in Canada, a pretty slow week trading wise. So just as a heads up, a lot of big institutional traders, if you're not familiar with, volumes cooling off a whole bunch around the holidays. It's been a pretty rotten year for a lot of people. So I think people just want to get the hell away from the trading desk and go have some fun with their family stuff. No surprise. So volumes are going to be lower. So in addition to that, we have the ISM services report. Do keep in mind, I'm going to talk a little bit about all currencies, but if there's a specific pair, as I'm going to rip through them pretty quickly, just in essence, because I think you'd be best for, instead of me going on and on about slowness and really not much to speak of in terms of charts or anything, go back and watch some of the videos from the past, sort of get caught up on just a general education. The whole goal of any of this is, just like I did last week with a Canadian and a very senior builder inside this company. He's also a very good trader, but he has a really good job, 9 to 5 in the finance industry in Canada. I was able to learn additional stuff because he is an expert in trading views. So we took some time last week, showed me a few things I'm actually going to overlay onto my charts as I begin to sort of continue a mass migration of my education and charting from 2 other platforms I use to TradingView. So, so that's pretty much it for Forex Factory. Red folders are really the only ones I pay attention to for the question I just got. All right, let me open up one thing here. All right, so let's switch over to what I want to talk about first. Let's take a look at just a macro picture. Finviz.com, for those that are not familiar with this. This is always a great exercise in making sure that you go to the Forex space or the future space, switch it to daily, and you can go down and see the both correlations and lack of correlations between the different currencies. But downtrend broken essentially in US dollar, rallied up a bunch. This was on some Fed comments from a non-voting member a couple weeks back. Formed what is looking to be like a pretty decent little handle, cup with handle pattern, but we're up against a pretty serious resistance, which we rejected on Friday. So this whole 92.50 to 93 area relative, it's the exact opposite if you're looking at the Euro chart. So I try to, I'm not as concerned about understanding JPY. We're still in a downtrend in relation to the US dollar. Notice how both the GBP and the Euro charts look similar, okay? So that draft down, obviously, when the dollar popped, a little bit of the same thing has been showing. Aussie, same way. New Zealand, the same way. And to a lesser degree, Swiss and the Canadian. You can see how these charts all look very similar. The onus, in my opinion, again, this week, depending on what goes on in bonds and obviously the commodity area and space, do note that especially in metals, we're in a fairly confirmed downtrend on both the copper-based, which is surprising because it's a semi-based commodity, to gold itself, which is gapped down. This is mostly dollar-based. Same thing with silver. This sort of has a tail wag effect on gold. But just understand sort of how these all play out. I know I have a tendency to jump around. I don't really want to do deep dives in any of this stuff. Just want to show you guys just a basic 25,000 foot level correlation from a macro perspective. So taking a closer look at the dollar, I wanted to just note this. This is a 2-hour chart, but I think this illustrates this. This is from a guy I've become a little more friendly with on TradingView. His guy's name's Golden Eagle. He's actually really good. He does a lot of excellent analysis. I just don't have time to mark up on the charts like he does. So you're going to see some more stuff coming in from him on a shorter time frame from me, only if I think it could really help in a major turnaround. So we're essentially up against this area that I talked about. More specifically, it's a major downtrend line touch. But there's that zone you'll all see on a lot of golden engine stuff in this whole zone area. He expects essentially to bounce back. So what does this mean for you? It just means if you're accepting trades US dollar based on any pair, it could be a nice little reversal opportunity next week. So essentially, instead of continuing higher, which the longer term chart, if we drop back to DXY in a daily, you'll see maybe not like the best pattern, but you can see how we're cup based on the daily, handle. Okay, you'll see me talk more and more about these, but usually pretty powerful chart patterns. But unfortunately, we're up against, I'm gonna have them drawn here, but we're up against a longer term trend line touch essentially right into this area. So expect a reversal. If not, I think it'll catch a lot off guard. Ultimately, we expect both these very solid orange lines to get broken to the downside. It could play out a lot longer than I had anticipated over the last couple of months. So it's tough when you're always trying to, think big picture, just speak on a very macro level. Try not to be too much micro, but I think it's maybe going to become more helpful, as I know a lot of subscribers have sent me notes that they're getting a lot more educated on this. I can continue to bring in new pieces of technical analysis. So let's bring in the Bollinger Bands. So this is a custom Bollinger Band setting for those that are wondering where the settings are. Let's take a look at actually, let me get back. These are the settings for the Bollinger Band if you want to see them. 275 standard D, length 34. So this is a little bit different in terms of how it shows itself. If you want to look at that or copy it, you can always put these colors and everything where you want it. Not as important. It is really just understanding that this is a little bit different than normal settings from Bollinger Band, and this comes from, in my opinion, guy that's just been stellar trader the last 20 years, much better trader than I am, has a heck of a lot more time to put into the charts. So if I have confirmation of a particular individual skill set or their ability to just sort of be a boss in a particular area, I have no qualms with using their indicators, especially with someone like this that has a monster following and trading view. So just know that this is this, but do note that look how absolutely spot on a daily chart, okay? Spot on these Bollinger Bands have been. Look at that. Perfectly wrote it down. Rarely breached, right? Snap back inside normal standard deviation reversion to the mean. Getting real crazy again at downside. Look at that, just riding the 34 Bollinger Band down. Boom. Snap back, some basing, obviously. Any really crazy moves, look how they've been completely contained by a 275 standard deviation, which is a bit more of a stretch. This is one of the first times in the entire viewable window we have here over the last couple of days that a rip higher, right? And this was on obviously all kinds of different news, changes in money supply, transient inflation now actually being repeated by a Fed governor who used to be a voting member, actually one of the smarter of the 12 governors, right? Equally as much, but there's been a lot of dissent on the street about at least our Fed governors, especially Jerome Powell, who is our chair, in that he is one of the very few in the last 50 years to also be one of the richest governors with a personal wealth over 100 million. So a lot of beginning to wonder is he beginning to just continue to work his own book? I kind of break from that because he doesn't strike me somebody that's going to wreck the entire economic system. Just have his own book do better. But who knows? It could be wrong. Hey, Case, this is a good indicator. We'll use it. We will also show you guys the so this is the volume profile variable range. You're not going to see it show up here on something that's not volume based. But if we take a look at it on Euro USD, this kind of seems like a lot. So let me just show this. I always forget to take these icons off so it's easier to see the screen. I'm lost without them on. All right, hopefully it's a little easier to see. So this is Euro US dollar daily chart. Each candle represents a single day. We're viewing essentially this from December till now, okay, through an entire little bit more than a year and a half in the viewable range, because I want to see all the volume that took place. Obviously this is FXCM's volume. I guess it's aggregated with a number of other big ones. So for just purposes of just illustration only, on a viewable range that's approximately a year and a half, we have all the volume. So where is the center point or what they call a point of control, you'll see right here at this 1.18 area. So buck 18 area, right? That's where all the volume executed. Or I should say, not all of the volume, but the highest amount of volume. See the spike? This is a bell curve. What it is an aggregate of all the volume that's executed in a particular area. Now, caveat to this, and just roll this down so it's a little bit easier to full screen see. This is exceptionally useful in many, many areas where you have an instrument that gets, or a group of, like the futures markets or commodities that have most of the volume that gets executed on a centralized exchange, right? Like the Chicago Mercantile Exchange, or the DAX or Eurex, which is the futures exchange in Europe, or any of a centralized exchange. It's much more predictable and dependable data, right? So if you feel that you have the right data coming in, volume profile, which I have posted just a numerous amount of stuff about recently, because it is one of the most powerful tools that I use on the futures and equity side trading of the business, which can also have a pin action effect on trading options, not of a binary nature, but options on equities. Very powerful in being able to utilize this as a tool. A lot of institutional traders use this. It typically has not been something that was accessible by the retail trader. Yes, there were versions of this on like a Sierra Charts, or any of the other charting platforms like Thinkorswim, or which is we're looking at a crappier version of this traded on NinjaTrader. I think the trading view outside of Linsoft IRT and the market profile Delta guys, which are no longer with us, this is the single best version I have seen since Linsoft's IRT, which I still use. It's a bit wonky, and you cannot apply it to anything other than equities or futures on their platform, unless you need all these ridiculous data feeds coming in. So you basically have a Bloomberg terminal to see what I can see on TradingView for 25, 30 bucks a month. It's a total deal in my opinion. So as long as this volume is quality data coming in, and I stress that because I'm always suspect of the quality of the data, but FXCM is one of the largest on the planet. They're hooked up to every liquidity provider on the planet. But just be understanding these guys are heavily engaged in B-book activity, so I don't recommend them as a broker. In any case, so all that droning on just goes to show us where the center line is in a volume-based environment, and where the highest amount of chances are for support. And you can see how through a period of time, this line has absolutely nailed a lot of these moves. Some cases it's gone through it, but it's always held the general range of this. Now, if we were to drop down lower, let's say the dollar continues to rally, we crash back down through, which I find to believe a very strong support range, all the way till bucks 16.30-ish per dollar or per euro area to be one of the strongest areas of support. But below that, it's no man's land. Do note that right here, which almost lines up perfectly with this orange support zone, is the bottom of the 70% value area low on this market profile and volume-based chart. High of the 70% of the range of the volume that's traded, it's right around this 122.50-ish area. So do note the changes in the colors. I guess I probably should have a different color for outside of the 70% zone, because that's really all that matters. If any of this confuses you, my apologies, but it'll hopefully force you to go into my Telegram channel, download the 5 or 6 pages on this that I have up there, in addition to some pieces that will give you an understanding of this. But that's essentially volume and market profile, Bollinger. So with that being said, let's drop out to GBP. So daily chart still stuck inside an upper range. Strongest areas of support right here at 36 78, which almost perfectly corresponds as well with the 200-day red line here. So pretty big area in here, could really provide some support. But honestly, if the dollar's going to drop, it may run up a little bit. It's going to be in this zone, thus reversing down. I still see this going back up. They've got pretty tight area here in terms to blast through. Anytime these orange lines show up, it just means it's going to be a more difficult area, potentially reversal and or to get through. Once you get through, it's probably going to be pretty good sailing, provided the dollar just breaks down below those 89.50-ish areas, which are at the very bottom. GBP CAD, just a little question I got on that. I'm still in a tight range. Make this easier to see. CAD CHF still in that tight zone, still coiling. Same type of chart. Remember, we're just looking at dailies here. GBP JPY, same tight range. US CAD, and obviously this is going to be the opposite of what the dollar did, right? Or this is going to look very similar to what the dollar chart did. Cup with handle. See that? I still would expect this thing to break lower, quite frankly, as the dollar loses value. Could be wrong. US dollar Swiss. Aussie US dollar. When below those ranges now, this becomes potential resistance to the upside. AUD CAD peaked its head below last week, came back up, found support. It's more than likely means that at some point this red line from a 14 different component algorithm, which is what the squeeze zone is, it's written by Dasan, our variable developer. It's actually a really good piece. I use it a lot. This more likely could turn orange if we spend some more time above it. Euro AD, tight coiling. Euro CAD, I know we get some questions on this. First time since the 12th of May, we've been down here. So looking in the greater scale of things, tight range, broke it. Had some pretty good movements down on some higher vol, as you can see here. This would probably be a good one to open up our volume profile. So of the visible range that you guys see, again, this is a whole year and a half. Just make it almost a perfect year. And there we go. Almost a perfect year here. Each candles represents a day. We're back down, poking our head down here. Notice in terms of the entire area, we are way below. But with volume profiling, you always want to see the movements in terms of the volume that accumulated in areas that we haven't been in a while, right? So you want to see what took place in the beginning of 2020. Now, obviously, this is pandemic related, and how can you read into this when things were crazy, right? Crazy or not, there still could be a bunch of institutions out there defending these levels, right? From the perspective of, imports and exports between Europe and Canada, and this could have a profound effect on prices, right? Especially if we drop down into this area. Ultimately, this would mostly be a pin action based cross, if you will, which is what I consider this pair to be. I know that many would argue that, but the dollar's going to lead these around. So it's imperative that one looks at the dollars in relation to the Canadian and the euro first before you move to this type of analysis, in my opinion. Gold from a spot standpoint, this is where this market profile chart can be real effective, right? Because again, we're just looking at, let me just see if I can put all of the viewable. See, as you change the viewable area, see how the support line of this main center point, which is critical, see how it changes its movement. So if you're looking for additional confluence, right, this is nothing more than an area where other types of technical analysis line up. And quite frankly, if you get a whole bunch of things lining up in one area, it has a lot more strength, right? Fibonacci support lines, time-based profiling, which we really can't see on this chart, but we can see volume-based profiling. I'm in the 1731 area from the standpoint of a little bit more than a year and a half. This is the line in the sand. Now, does that mean when it comes down to it, it becomes a tradable bottom? It just depends upon how it acts when it gets to that area. Ideally, as I drop back, you can see that the longer the term that you look of data, get rid of this, the longer of the term that you look of data, the more volume gets aggregated into one computation on a in this case, a vertical scale, just like a bell curve on the left-hand side here, the stronger these lines become. So your 70% of your value area high is right here. This is an important area to be noting, at least in terms of this viewable area or this time frame. Value area low, which represents the bottom of 70%. No surprise, is right at the 1676. So for those looking maybe for more swing trades, or if you're looking for to trade this from a currency or an MT4 execution perspective, once we get back down to this 1617 or 1676-ish area, this is pretty solid support. It's about as solid as you can get. Right at the value area low since the beginning of 2020. So keep that in mind. Will help with additional support confirmation. Let's take a look at the coinage. Now, again, this is great, by the way. So if we're looking at, I'm just going to show this whole. So this shouldn't surprise you guys. That's why I kind of chuckle. I mean, look where the center line is. There's been a number of people in terms of volume that is executed. We're still just from a and this is thin volume down here, but I want you guys to kind of see the whole aggregate, essentially from. Actually, let's just go back and just look at 2020 to now. Not going to change too much. See how this center line, this whole 93.44-ish area, it's all the volume executed. We're still up in nosebleed section. We're even above the value area high. No surprise, by the way. Look at the value area high. I actually even looked at this yet, so this is a surprise to me. It perfectly is the support of this currency. So essentially 70% of the volume value area, high area, right around this 29.3-ish, right, 29,300-ish per coin area, has totally held as support. If this goes, a lot of times you'll have what's called a cross zipper move, meaning that it will run to the point of control. So there is a certain, for those bullish out there at much higher prices, as I've talked about this in one other podcast I was on about 2 weeks ago, and I actually didn't even use this chart. I totally should have, would have made a stronger case that if this does not hold, which is the value area high from the last year and a half of volume in the aggregate, right? Volume profile. Is it? I don't know where the hell it could go. Ideally, the breakout point was right around 20, which is an area I've been first calling for. But now you take a closer look at this on a longer term market volume-based profile. Looks like it could be this whole 10,000 to 11,000-ish area is the next sort of zone it may run to, which case you'd want to see it base out for a while, put together a nice tradable bottom base, and then maybe you could start dipping your toes. You certainly could do a 22, but I wouldn't even be anywhere close to a full position if this got down to these areas. So just know that probably doesn't help much in terms of any of the MT4 stuff or any of our software products, but I know there's a lot of subs out there that trade this outside of it in some other type of account. All right, so what did I miss? What did I forget? Ethereum, if you want to see it. Notice that volume point of control still way down there. Here's Neo, by the way, up against a real big area. You really want this area to fail, right? And to continue to go down. That would fall right in line with Hope and Neo seeing the importance of this zone. Look at it from a volume profiling perspective. I don't know how good the data is on something like this. I don't know who these IDC guys are, so let's just take it with a grain of salt in terms of quality of volume data. I would think this is it right here. But crazier things have happened. So as we, so let me just ask me about oil. Oil's up in nosebleed section. That would not be a buyer up here. You could see this just for the point of looking at it. For those who question me about silver, it's the same thing. Center line of all the volume is right where it's at. So no surprise we spent better part of a year inside of a very tight base on silver. What else? CAD, JPY still inside the range. Euro CAD. I don't know if anybody asked. I think we already looked at this, right? Yeah. Now, I'll tell you, one other thing from a profiling perspective, whenever the point of control from a, and again, we're looking, let's take a look actually closer to a full year and a half, right? See where the bottom of the value area is, right? Where all this blue starts to turn into a lighter blue. See how that completely held us on the rally? Almost to the tick, came right up. A lot of people are like, well, there's reversal lines and, there's support and resistance. Sure, there's all kinds of stuff. This is more powerful because this is where the big money has executed at. And obviously, when we came back up to this area, now obviously, pin action off the dollars movements, right? But those up here watching all that other stuff, we're defending this from a short standpoint. Back down we went. Tight potential coil to break out from. Although I think this could be, quite frankly, a head fake down here if the dollar starts continuing down. Who knows? Could really show itself. It's always tougher to call these. So that's kind of my thoughts on all that. What else do I want to show? Yeah, so I'll be talking more about this concept. Understand the different segments of, you guys have probably seen different versions of this. There's all kinds of there's all kinds of traps, if you will. And I show this because, essentially here's where the smart money is. Okay. Right. It's catching the swings, who knows, this could be some other entry point on a stock chart. It's not as important as that. It's just understanding the concept of risk management in this. You want to be in this early area. Okay. The problem with the vast majority of traders, and I hope I will never include Auvorian subs, like a year from now, especially some of our more senior folks in this. But the vast majority of people don't start investing until right here, because it makes a front cover of whatever magazine or newspaper, right? Or it's all over some social media. You want to be an investor here, and you're selling into this, right? So you hit that greed phase, and this is absolutely, by the way, can be completely overlaid on top of a Bitcoin chart. The early adopters, the ones that made the big money, they were selling into the nuttiness that was taking place in February, right? And then you have all the new paradigm people out there, especially on social media, saying it's going to 500K, it's going to 100K, and now they're in denial, right? And then you have a little bit of a rally like we did when the coin went to 40K a coin after it dropped all the way to the 30-ish area, right? And they're saying, oh, no, it's good. Now, at some point, we haven't hit this, in my opinion, or close. If it breaks below 29, you will see fear. You will absolutely see capitulation. In some cases, these two could be combined in one absolute flush, right? The despair part is when you want to be buying. So this isn't new. It's been around for 100 years, but it is one of the single best descriptions, in my opinion, of the human and the problems the human mind has with emotions and trading or any type of investing. Okay. Don't ever be this person anywhere in this area, right? Don't be a knife catcher, right? You'll rarely ever see me, whether it be a stock discussion. I'm always looking for a solid base for something to break out of, right? I don't care if it's a crash in art, classic cars, which I'm into, on that kind of stuff. I want to see, like right now, classic cars, you're looking at all the auctions around the country, around the world for that matter, it'd be Barrett Jackson or Meekum or any of them. I mean, the cars are all right here right now, right? It's ridiculous. Some of the numbers these people are paying for. And in all fairness, some of these cars are really rare. And hell, I guess there's a Ferrari Nart edition that's worth 30 million, right? But I wouldn't pay it even if I had that kind of money. It's bananas. I'd rather wait for the fear capitulation to take place and then the despair when everybody just throws in the towel. When this happens and all your friends are broke, this is when you want to be buying. With that being said, wish everybody a great 4th. Tuesday, I'll be back on the mic at 10 a.m., but I would expect volumes to be later next week. So start getting your party hats ready for Orlando. Should be a great time. I'm actually going to be there for 7 days because we're moving to the area. We're going to be out hunting around for homes and in a very tight real estate market. So wish me luck that I don't wind up buying a shed to live in because I can't find anything else. So thank you, guys. Appreciate all the feedback. Thank you very much. Have a great week. May the trades be with you.